In 2020, the U.S. government responded to the COVID-19 pandemic by providing stimulus checks and increasing unemployment benefits to millions of households. These measures prevented a severe recession, but now, 3 years later, significant uncertainty exists in the U.S. economy due to bank failures and inflation. Two major bank failures have rocked the U.S. financial sector, leading to the most significant government intervention in financial markets since 2009. As a result, Wall Street raised the recession threat level after the collapse of Silicon Valley Bank, SVB. Government regulators spotted problems at SVB well in advance, but the bank ignored the warnings, leading to its collapse. Congress is holding hearings to investigate the recent bank collapses. Additionally, Credit Suisse is the latest financial giant to face a possible takeover due to interest rate hikes and bank failures. Last week, UBS announced that it would purchase the bank and take it over. More details on the deal will become public in the coming days. In other news, inflation has become a major concern in the U.S. economy, driven primarily by rent and housing services. Before the recent period of accelerated price increases, inflation was around 2%, with rent inflation at around 1.5%. However, the tight labor market, with job gains and wage increases, has led to a greater demand for housing services and fueled rent inflation. This presents a challenge for the Federal Reserve in bringing inflation down to its target of 2%. Finally, Social Security and taxes. The U.S. government provides direct relief to thousands of residents in several states, such as Connecticut, Idaho, and Maine. The average Social Security check is currently at $66, with the possibility of the Social Security COLA being much lower next year. On the other hand, some beneficiaries will receive double Social Security payments in March. Additionally, taxpayers can claim up to $2,000 for the mortgage interest tax credit, and a list of refundable and non-refundable tax credits are available to taxpayers in the 2023 tax season. The U.S. economy faces a challenging period due to bank failures, recession threats, and inflation. However, the government is taking steps to stabilize the financial sector and provide relief to its citizens. The Federal Reserve is closely monitoring the situation and is expected to announce further interest rate increases. It remains to be seen whether the U.S. economy will experience a recession in 2024, but experts predict that a recession is more likely after the recent bank collapses.